So welcome to the build. I got a couple of questions that came in that I'm going to go ahead and combine because there was some overlap and some similarities. So the question was really basically asking about business formation type, right? So when you're forming your private practice, how should you form it? What are the things to think about? What are the considerations? Whether you want to do a PLLC, an LLC, an S corporation, or a sole proprietorship. And there are some serious considerations to think about. So we'll go through some of that today, okay? So the first one, we'll talk about the PLLC, which is a professional limited liability corporation. Then an LLC, professional limited liability company. Then an LLC, which is a limited liability company. Then an S Corp, S corporation versus, I'll just write sole P for sole proprietorship. Now I am not a business person or a tax person. I'm a business person in terms of like I own a therapy business, but I don't do business formations. That's not my job, right? I'm just a therapist with some experience who's been doing some of this for a while. So with that said, with a professional limited liability company, we're going to talk about with each of them a few things. One is the process, how easy or difficult it is to form. Then we're going to talk about taxes and things to consider regarding taxes for each one. We're going to talk about ownership, and we're also going to talk about tax identification, right? So with a PLLC, right? Now that's again a professional limited liability company. The way that that's formed is you send what's called the Articles of Incorporation, right? So Articles of Incorporation. Okay, Articles of Incorporation. This is a fancy name for some paperwork that you send into the New York State. Where do you send it? Where do you find it to form your company? You find it on dos.ny.gov, which stands for Department of State, New York.gov, right? So for forming a PLLC, an LLC, or an S corporation, you have to file Articles of Incorporation with the Department of State in New York at dos.ny.gov, okay? You can go to this website and look at the process. It's a doable process, takes a little work, but it's doable. After you check the name, make sure the name's available, you go ahead and select which corporation type you're doing, you do the proper paperwork, you send it in. Then once you get the forms back from them, when they approve it, you get that published in a specific number of newspapers. There are also organizations, companies that can do that for you. The only one you don't do that with, the only one you don't have to form with Articles of Incorporation is your sole proprietorship. Your sole proprietorship. And sole proprietorship you form, you already have one, right? Every single US citizen can form a sole proprietorship. It's just basically using your name for business. So the limits to that are you can't come up with some fancy or creative name like you could with a PLLC, an LLC, or an S corporation. If I were to form a sole proprietorship, I would have to do it under Amira Martin. So my website would have to be amiramartin.com. My business cards would have to say amiramartin.com. I can describe what I do, can't use another name. And when I create my bank account, it would be another bank account that I create, not a business bank account, but a bank account that I create under Amira Martin, and that's where I put my money from the business. Okay, so that's formation. With each of these types, right? Whether you're doing a PLLC, an LLC, an S Corp, sole proprietorship, you must have a separate bank account from your regular bank account. If you try not to do that with your sole proprietorship, what can happen? The state can come in and audit you and say, hey, there's no way we can separate this money. You're going to have to pay us personal income tax on everything you've brought into this bank account. So that includes money that may have been a loan from a friend that you paid back, payment from other employers, your inheritance from your grandparent, everything, right, that comes in. So you want to make sure if you're doing a sole proprietorship that you go ahead and you start a different bank account. And every dollar that you get from that work, you put into that bank account so that you have proof for the state and for your taxes. And if you're ever audited by the federal government, anything, you have proof of income and that you were paying the right tax amount. Now, with a PLLC, an LLC, and an S Corp, you must do those things, right? You absolutely must. Nobody's going to allow you to put money into a bank account under one of these things that's not your business bank account that you form separately. Okay. So, bank accounts, don't forget that part. Now we're going to think a little bit about taxes, right? So, with a PLLC, it is taxed as a sole proprietorship. So it's taxed just like this last one here, right? Which means that you have to pay, on your income, you have to pay personal income tax based on what you bring in. So whatever you bring in from any of these, well, not the S Corp, but PLLC in general, LLC in general, and your sole proprietorship, you're going to pay 15.3%. That's right, 15.3% of your net, right? Not your revenue, not every dollar you bring in. Not your net, not your revenue, not your gross, but your net. So that's the amount of money that you have after you've paid your expenses. So if you rent an office space, if you purchase advertising, if you have, a part-time assistant to pay, whatever it is, after you pay that from your revenue, the full amount that comes in, or your gross, the full amount that comes in, what's left after you pay those expenses out is, again, your net. So with a PLLC in general, an LLC in general, and a sole proprietorship always, you will pay 15.3% of your net to Uncle Sam, okay? Now, a couple of things. So if you are a PLLC, you can decide to be taxed as an S Corp. If you are an LLC, you can decide to be taxed as an S Corp. If you are an S Corp, you're taxed as an S Corp. Okay, so what does that mean to be taxed as an S Corp? So that means you have to decide something very important. One, you have to decide what your salary is going to be. So with an S Corp, there's a specific term that they use, something like reasonable standard salary or something like that, that the federal government uses. If you have an S Corp, or if you decide with your PLLC or LLC to be taxed as an S Corp, you have to decide your salary and any other salaries that you're going to have for people working in this company. After those salaries are paid, right? And yes, of course, after the deductions and all that. So after the salary is paid, then you pay your personal income tax based on your salary. So let's say you brought in $100,000. No comment there. All right, let's say you brought in $100,000 last year, right? And you have an S Corp. You decided your salary is $75,000, right? So after that, your salary is $75,000. You brought in $100,000. So from your $75,000, you pay personal income tax. So you pay that 15.3%, right? And then what's left? What about the other $25,000, right? That other $25,000 you can give to yourself as a distribution. You give to yourself as the shareholder, a distribution. If you have other shareholders, as other people who have stake in your business, who own a share of your business, they also get a share. They also get a distribution payment from that share, okay? So that is why people sometimes say an S Corp is a better route to go. Not necessarily. If you don't earn a healthy salary, the amount of time and energy in maintaining an S Corp can be cumbersome, right? And not worth it. So it's a lot more strictly regulated, many more meetings that have to be recorded, or you have to keep documentation of. You have to have certain officers and meetings on a regular basis and proof and yada, yada, yada. So with your sole proprietorship, you're paying, again, 15.3% to Uncle Sam for everything you brought in. Okay, what's the next? So other considerations, right? Let's see what else we have to think about. Whoop. All right. There's a couple more things. So ownership, okay. So if you have a PLLC, you can have a single member PLLC, which is just you, or a multi-member PLLC, which is you and other social workers, mental health counselors, psychologists, whatever it may be. But whatever your PLLC is for, right? PLLC is professional limited liability company. So you have to be a recognized professional by New York State, which means that if I'm a social worker, I can start a PLLC. I would have other social workers join me. We all have to have a license that's recognized by New York State, okay? But you can have single member or multi-member. So single ownership or multi-ownership, it's up to you. LLC, same thing. Single or multi-ownership. S Corp, same thing. Sole proprietorship, just you. You're the only owner. This is under your name. Your social security number is the tax ID number. So nobody else is owning this with you. All right, now let's see what else. Your tax identification number. So after you have set up your PLLC, LLC, S Corp, or sole proprietorship, well, except for sole proprietorship. So after you've set up a PLLC, LLC, S Corp, you have to figure out your identification number, right? For your paying of taxes and all that. So you set up an employer identification number, an EIN number, after you get those documents back and you have your articles of incorporation have been formed and everything's fine. You get that document back, you go online and just Google EIN. It will come up. Apply for an EIN in New York State. You do it right there online, okay? So I hope this was helpful. Again, I am not an attorney. I am not a CPA. My business is a therapy, mental health business. So, take this with a grain of salt, but this is my understanding and what I've learned from doing this work. All right, have a great day.